Good morning and welcome to the ADS Securities Markets Update. We'll start today with an overview of the first trading day of the week after the US jobs report. Basically, the US dollar saw a choppy day across the board while the crude oil crash continued. The West Texas crude fell below 45.50s and Brent crude is trading well below 46.50s so far. However, gold prices also recovered further in the Asian session or during the Asian session, reaching as high as 1240 due to the fears of Greece. Finally, also the US equities also saw another decline yesterday. The S&P 500 fell by 0.81%, trading below 2025, while the Dow Jones eased by 0.55%, closing the day well below 17,640. As for the Asian session today, there were a few economic releases from Japan and China, which had a notable impact on the markets. Beginning with Japan, the current account surplus came in lower, but slightly better than expected, declining toward 0.91 trillion yen in Q3 or the third quarter of last year, comparing to 0.95 trillion during the second quarter of last year, while the estimates were to decline sharply toward 0.69 trillion yen. In China, the trade figures came in with stronger outcomes. The trade balance surplus eased less than expected toward 49.6 billion in December, down from 54.5 billion in November, while the estimates also were to decline toward 48.9 billion. However, the exports increased by the most since October, rising by 9.7% in December, while it had been anticipated to rise by only 4.5%. And the imports also fell by 2.4%, while the estimates were to decline by 6.2%. The Aussie and Kiwi also advanced following the Chinese figures today. The Aussie advanced to as high as 0.82 before easing back toward 81.60s, while the Kiwi gained again to as high as 78 or 0.78 before easing back toward 77.70s. As for the European session ahead, a collection of economic figures will be released from Italy and the UK, which may have a notable impact across the session. Beginning with Italy, the industrial production is expected to rise by 0.1% in November, comparing to a decline of 0.1% or comparing to the same decline or same rate in October, which would be also the first monthly increase in 2 months. In the UK, all eyes will be headed toward the inflation figures today, which likely to ease back more than expected during the month of December amid the continuous decline in crude oil prices. The year-over-year CPI is expected to slow down further, but toward 0.7% in December, down from 1%, which would be also the lowest reading since 2002. However, the core CPI is expected to recover again or to rise further toward 1.4% in December, up from 1.2% in November, which would be the first monthly increase after 3 months of consecutive declines. The PPI input also is expected to decline further by 2.5% in December, comparing to another decline of 1% in November, which would be the biggest monthly decline since 2009. Finally, the year-over-year house price index in the UK may slow down further toward 10.1 in November, down from 10.4% in October, which would be also the second monthly decline in a row and the lowest reading since April of last year. As for the US session today, there are only 2 minor economic releases across the day, which are likely to have a slight impact on the markets across the day. However, further decline in crude oil is likely to lead the move for the day. The NFIB Small Business Index in the US may rise further toward 98.6 in December, up from 98.1 in November, which would be also the highest reading since 2008. And finally, the new jobs opening is expected to rise further or to rise again toward 4.86 million in December, up from 4.83 million in November. This is it for today, or these are the economic releases for today. You can follow us on our social media sites, Twitter, Facebook, and YouTube to get the latest economic releases, reports, and analysis. Thank you for watching.